This is part 5 about how to think about the market within our Basics of Professional Betting series. Okay, after we got the probabilities down, we can finally start thinking about the market a bit more. Perhaps through the knowledge acquired from trading in the coin toss markets, we possess insights into how psychological effects are likely to unfold. So knowing how the market will likely be biased will play to our advantage. We might even be able to make profitable bets even if the market never offers us any clear value bet opportunity. How is that possible? Probably didn't expect something that outrageous from our channel. But with our coin toss market, we can show you how that will work. We changed the market after the first coin toss a bit, so it doesn't offer any value. Remember, we need a 1.3509 minimum to get value with our 5% Betfair commission. No chance for us to get a value bet on here, even with the clever bet placement we explained in the last video. So what to do? How our knowledge about the market could help us here. How we could make a profitable bet here by backing 135 if we know how the market will likely develop after the second coin toss. You always need to think about what's going on in the minds of our traders, be it professionals or casual traders. Let's assume we are in a trading world where we are the only professionals and we are only up against casual traders. What drives the market then? What drives the market to deviate from the true odds? It's basically greed and fear which work contrarily. In our situation, you can imagine that traders, having seen player A win the first coin toss, wouldn't even want to trade out at odds of, let's say, 130, as they don't want to squander their full winnings they might get from their initial around 2.0 odds. They are greedy. At the same time, there could be traders happily trading out at, let's say, 1.38 to secure their profits. They have won money despite having taken negative value. It doesn't come to their mind that it's actually stupid what they're doing. Now, what might happen after the second coin toss? If player A wins, the match is over and obviously no opportunity for trading out anymore. But if player B wins, how trading psychology might influence the market? It's actually reasonable to assume the market will be biased in favor of player A, because people who laid player A can get out with a good profit. Now, in reality, that effect might not be there or not be significant. But that's where your knowledge about the market comes in. If you know that in tendency the market will be just a little bit in favor of player A, you can make profitable bets. So let's assume you know the market will look more or less like that after the second coin toss that player B won. Again, we have no value bet opportunity here with Betfair commission. So laying 1.98 on itself isn't profitable. But with an initial 1.35 back bet, these bets combined will be profitable. Remember, you only pay commission on your winnings. We have two negative value bets after commission, but combined they turn into positive value bets as we reduce our expected commission payment. And here's the proof. Let's assume a €100 stake and 5% Betfair commission. If player A wins round 2, we get stake times odds minus 1 times 1 minus commission rate. We put the numbers in, a profit of €33.25. If player B wins round 2, we trade out. What's the formula for the amount when trading out? Very simple. Back odds divided lay odds times the original amount. So 135 divided 198 times €100 equals €68.18. And that leads to a loss of €31.82, no matter who will win the final round. So if player A wins round 2, we win €33.25, and if not, we lose €31.82. And as it's a 50-50 chance, we already see that we have positive value and don't even have to calculate it. This is how you think about the market, guys. You know the odds, at least approximately, and then you apply your knowledge about the market. That way you make money, not by trying to copy a bullshit strategy someone told you on YouTube. By the way, even if the market was at 2.02 after the second coin toss, you'd still be profitable. Sounds crazy, as that would be a negative value bet on its own even with zero commission. But as you're waiting out, the commission you save and the big enough zero commission value of the first bet make up for the negative zero commission value of the second bet. So that's something really counterintuitive you need to know. Now, as you understand a bit more about how the markets work and how you need to think about them, we will be able to show you a crazy trick in the next video. Were you ever thinking about how cool it would be if you could eliminate that pesky 5 seconds in-play delay on exchanges? How you would hoover up the market after Djokovic hit an ace? Well, that's actually a trick on how to do it, so stay tuned.